So while a dog might be man's best friend and diamonds are a girl's best friend, today we're going to talk about why short sellers are a day trader's best friend. Hey everyone, Lead Trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, and share these videos. And also, definitely, one of the biggest things I want you to do is check out the Steady Trade team. It's one of the proudest accomplishments of my life. I mean, we're consistently mentoring and training consistently profitable traders. I think it's the best way to really learn trading, man. We're going to talk about short sellers. We're going to talk about float rotation today. We're going to talk about key levels, whole dollar, half dollars, high day, lower day, 52-week high, green to red, red to green. We're going to talk about a bunch of patterns, or not patterns, but terms in this video, and hopefully you'll learn them all. But the best way is with repetition to learn anything. I mean, I think the best way is just repeat this stuff over, because a lot of what we're trying to do is pattern recognition. Steady Trade team, 2 webinars a day, every single day. I've got over 2,500 webinars. I'm there every day with you going over this stuff. Check out the Steady Trade team. All right. That being said, why are short sellers a day trader's best friend? In my opinion, what's great about targeting these key levels that I mentioned is the panic points. Well, you might not know yet, but I'm going to bring it to you. You know the areas that short sellers are most likely to panic, and then what that creates is panic buying. Okay, that creates market buys. And if you've ever done a market buy, you get the worst fills in the world. If you're trying to market buy a stock at $2, they'll fill you at $2.25, and then the next print will be $2, and you'll be like, what just happened? I'm immediately red on this stock because I used a market order, because they give you crappy fills. That's just what brokers do. It is what it is. We can't do anything about it. And what happens when short sellers see those high day breaks, see those VWAP reclaims, see those 52-week highs, see those red to greens. That's one of the biggest levels we look for. And they're going to panic buy because they know, at least if they're smart, if they're not total newbies, they know that they have unlimited potential losses. I mean, in 2020, yesterday we had a stock up 400% EARS. I mean, look it up for December 1st. I mean, dubious news. Nothing but a short squeeze. And the reason that stock moved is bad long-term chart, historically a terrible company, very dubious news, but it was a 1 million float stock that repeatedly broke the high a day. And actually, let me bring that one up. I've got another one to focus on today, which was one of the best ideas we had. But look at EARS yesterday. I mean, look at every time this stock breaks the high of the day. So you've got the pre-market high. What happens when it breaks? It spikes, pulls back. But then what happens when it breaks that high day? It rips, pulls back, breaks high day, rips, pulls. I mean, and I can just repeat all day long as this thing marched from $1 to I think a high of $6.60. $1, just over $1 a share to a high of $6.60, and just rips through high days. And that's going to happen because shorts front load these stocks. They can't wait. I joked about on one of the recent videos, I joked about the teenage boy on a first date. Short sellers ruin everything. Just like teenage boy on a first date. They can't wait. They ruin everything. So anyway, that being said, they get in too early. They get too excited. They get too heated. And then they get squeezed out over and over again. And if you look for these panic points, those are your buy areas. Now, you always have to have a stop. And that's why we use in the Steady Trade team, I talk about the 3-to-1 risk to reward methodology. I've actually got a technique where we, based off of the chart, we determine our risk to reward, we determine our goals as well as our stops. Because remember, with a lot of these stocks, you got to have that predetermined exit on the plus side too. Because if you get greedy, they often pull back hard. And that's why I really love that 3-to-1 risk to reward methodology. So let's skip to Cat B today. And this is a great example of what I call that dip and rip pattern. And if you've been on the channel, if you've been on the pre-market preps, every morning, 8:30 Eastern, I go live and listen. You could go back to December 2nd, 2020's pre-market prep. I called this a dip and rip all day long at 8:30 a.m. after the stock had already pulled $1 off of its highs. How did I know that? How did I predict that at 8:30 a.m. right here? And then the stock breaks the high of the day at 10 a.m. and proceeds to spike $1 a share. Because I know that when shorts short this dubious news, you've got a relatively low float. I mean, this is a 17 million float, but it's midday right now. I mean, I'm recording at 11:30 and it's traded 170 million shares. That's 10x float rotation halfway through the day. And you can do volume projections. Volume projection is another technique we use in the Steady Trade team where we calculate what we expect the daily volume to be based on those early candles when the news hit. And then we can extrapolate and do rough math. It's an estimate ultimately on what we think the likelihood of float rotation is and how many times the float will rotate. And so we knew this is a high volume stock. It's a weed stock. I mean, loosely tied with weed. But we knew if it pulls into the open, and look at this candle. Look at that opening candle. Big yank all the way down to $1.75. I mean, which was dang near red on the day. I mean, this thing went from 166 to 240 in pre and was 12 cents from going red on the day. That's the bait. That's why we love short sellers, okay? They take the bait. I mean, many of you know, if you follow me on social media, I'm an avid outdoorsman, big-time fisherman. I love to fish. And that weak open, and you'll hear me say this again and again and again, it's just like flipping that lure out there, and it's just sitting there on the top of the water, and, the fish is just like looking at it. He tries to ignore it, but he can't take it. You twitch it a little bit, he takes the bait, and then you hook him. You got him. And that's why they're my best friend. So then now we know, look at this building volume. You get the VWAP reclaim at 9:38 a.m. That's your trigger that this stock is in play. Okay, now there's a lot, smart short sellers. I mean, here's the thing. Every smart short seller exited on that VWAP reclaim. Okay, they knew. They shorted the week open because of the dubious news, because of the bad chart. The smart ones, the ones that are successful at shorting, took the loss at VWAP. Now, the ones I like are the dumb ones, the ones that are dumber than a fish, okay? And those are the ones that wait. They're hoping they get saved. Maybe some news comes out, maybe an offering comes out. They're the ones that panic at that high a day. And then you can see that beautiful 240 break, 250 break. We talk about whole dollar, half dollars, even better. And then you're risking down on VWAP. So let's say you buy that 250 break at 10 a.m. You're risking down at 224, risking 25 cents, and it proceeded to spike 75. Now, you're not going to sell the exact top. You can see that top was pretty quick. But you got your 3-to-1 risk to reward. And then you get this heavy red 5-minute candle. You take your exit, and maybe you make 50 cents a share. Maybe you make 40 cents a share, which on a $1 stock, $1.66 stock, it's a killer move. It's a killer trade. And here is the last point I will make. Why do I care about Cat B? Why do I care about ears from yesterday? Listen, I'm recording this video because it was scheduled. It was in my task manager. They said, Tim, record a video on why short sellers are your best friend. It pops up in my calendar, and all I got to do is ears was the number one stock yesterday. Cat B was the number one stock today. These are all patterns that repeat and repeat and repeat. And if you know what to look for, float rotation, weak opens, VWAP reclaims, whole dollar, half dollars, and high-a-day breaks, particularly if they're 52-week highs, those are all great signs. And you're just checking those boxes. Checking boxes, checking boxes, checking boxes. Doesn't mean it works every time. But I'm telling you, these heavily shorted stocks that break the high of the day 3-4 times a week, we get one every week. And if you're under the PDT, you can only trade a few times a week. And what difference would it make to your account if you had a couple hundred shares of Cat B, maybe 1,000 shares of Cat B, and you catch 40 cents? I mean, small account, $400. It's a nice day. It's a nice day. I mean, that's a nice day even if you don't have a small account. Nobody's going to complain, especially if you're a part-time trader or a new trader with a $400 day on a consistently repeatable setup. Then what if you had a couple thousand, 5,000, 10,000? You scale up. That's what's great about these plays. You look at that volume, 180 million shares traded at 11:30 a.m. You could trade millions of shares of this and get in and out. So it's a scalable strategy too. That's what I love about these liquid NASDAQs. I mean, I know a lot of you might be, true penny stock traders and you're looking at the OTCs and stuff like that, which got nothing against that. But, you can't trade those with size because you can't get in and out. The great thing about a Cat B is you can trade millions of shares of this thing when it ends up trading, 200 million, 300 million shares on the day. So focus on all those levels. Take your notes. Again, I talk fast. I threw a lot of terminology, a lot of jargon at you on this video. Rewatch it. It's free. It's YouTube, And then also, if you really want to get in depth, like I said, check out the Steady Trade team. I mean, I go fast in these videos because people on YouTube have short attention spans, okay? We try and keep it right around 10 minutes. Every webinar in the Steady Trade team is 45 minutes long minimum, okay? 45 minutes minimum. We treat it like a class. You take a class, a college class, a high school class. What are you going to get done in 5 or 10 minutes? 45 minutes every day, twice a day, you can get a lot done. All right, everyone. Have a great day. Look for that next hot float rotator in a hot sector that dips at the open and breaks the high of the day. And then we won't even talk about the VWAP hold high a day break pattern, which is the same thing. But we'll save that for another video. Have a great day, and we'll see you next time.